What's going on, everyone? I hope you had an amazing 3-day weekend. Happy Labor Day, everyone. But it's time to start getting back into the market for this week. In today's episode, we're going to be going over some awesome predictions and setups for this week, as well as some very important news you won't want to miss. And I'll tell you right now, guys, even though this week's going to be a short one, I have a feeling that it will be full of some great opportunities. So I'm pretty excited. I think it should should make for a pretty awesome week. But with that being said, Tom, let's jump right into today's episode.
Yeah, exactly. It was a long weekend, so happy Labor Day to everybody out there. And on Friday, the market had a pretty weird day. If we look at the SPY, we actually started breaking out to new highs last week, or new highs of the week, up to around like 450, 350. Then we fell off right there at market open. Pretty much all day Friday was a big pullback. And what was Friday? It was the very first day of September. So we're heading into the worst month of the stock market historically. It's definitely worrying to me. We kicked it off on the right foot with a big red day. But Mike, I'm sitting here looking at the charts here with SPY, Nvidia, and all these other stocks, and I am getting pretty worried. Friday was pretty bloody. Like, look at Nvidia's pullback. I know that the SPY was more of like slow and steady. It's still up around highs, but that Nvidia pullback was pretty rough, and we saw other big tech stocks like Apple actually close high, so it was very mixed there in the market. I'm curious. I'm kind of thinking we're going to fall down here heading into September, and this price action is just getting kind of crazy on the SPY, and I'm definitely looking for more of a pullback, kind of like we saw a couple weeks ago.
And historical data would definitely agree with you, Tom. Looking at the S&P 500 seasonality chart right here, we can see the red line represents the market for this year, and then the gray and black line represent the market's historical average. And we can see that it's, been moving pretty close to how it should have been, given the averages that we have. And coming into this time of the year, it is definitely the most bearish part of the year. And I know a lot of people are looking at this seasonality chart right now and definitely getting a little bit worried. So to say you'd expect a pullback is right in line with that historical average.
Yeah, and I think that we're just due for one, right? And we've been actually starting to come to the downside pretty well. If we go to an hourly chart on SPY, of course, this year we've been ripping up for the most part, right? But recently we've had this big type of pullback going on where we started falling under 455 and got all the way down to 433. Now we had this massive pullback back to the upside, and we're running into major resistances here, like 452 to 454 will be huge, and then 459 and 460 overhead will be even bigger. But that's if we even get there. I don't think we will, Mike. I think we'll start to fall down here a little bit more. We're kind of straddling this 450 area, so I'm looking for that pullback back down to around 442 or maybe 440. One of those lows down there at some point this week, probably like Friday, after a couple days of that price action comes in. But it's definitely worrying. We're at the worst month of the year, and we have all this data suggesting that the market's going to fall. Now, does that mean it's going to happen? No, but it's definitely one of those times where whenever you see the market fly up as much as it has already this year, you have to expect that type of flatness and pullback, and that's just that type of stage that we're in right now.
And some people, when they hear, a potentially falling market, kind of get scared and think that there's no opportunity, but realistically, some of the best opportunities are when the market's falling. Like, of course, it's easy to make money when stocks are going up every day, but there's also a ton of opportunity to make money, whether it's shorting stocks, buying puts on stocks, or even, buying stocks when they're low for the long term. But even more exciting than that, there are, what we'll call stocks, but ETFs out there that actually rise when the market's falling. So like SQQQ rises a lot when tech stocks fall. There's also like SPXS, which rises a lot when the S&P 500 falls. Or even if you want to get a little bit extra crazy, you can go to stocks like UVXY, which really explodes up when there's more fear and panic selling that, takes over the market. So just because we're heading into the worst month of the year, there is still opportunity for, to make money when markets are falling. But one other thing I want to go deeper on is why September is the worst month, but also some extra data to go along with it. So looking at this chart right here, we can see that clearly September is the worst month of the year. And since 1950, September's been red. For the past 20 years, September's been red. For the past 10 years, September's been red. In pre-election years, September has been red. That's the consistent theme here. And, it's worth noting because I know as we talked about last week, we had data going back 95 years, September was red, but it shows that, even as of recent of the past 10 years, September has still been very red. So, that doesn't mean September has to be red this September, but, looking at historical averages, it's hard to ignore.
Yeah, and I don't know why it would be red. Let us know in the comments some reasons why you think that September goes red every year. A lot of people talk about maybe tax harvesting. Something's going on right here where people want to maybe take some losses at this time of the year so that as they get into the later part of the year, they're not as high as they were or etc. I've heard a lot of different reasons why. So let me know what you guys think. It's very strange though, and you would think that something's going on with this month specifically. And I don't know what the big dogs are thinking here, Mike, but there's definitely some market makers out there that, I don't know, they just must not like the fall time or something.
I think the biggest reason September is red has to do with the fact that it's kind of a self-fulfilling prophecy. If you have everyone all over talking about September's a red month, it makes people act in a different way and, it just causes more weakness in the market. So I think that really does play a big role into, market price action. And, even digging deeper than what we have already, looking at each day of September, we could see that for the most part, the first half of September isn't that bad. It actually ends up going up, but most of the bloodshed comes towards the last 10 days, which is, when things start to get nasty.
Yeah, you can really see there the 19th of September to the 30th of September is some of the worst days. Well, I'll say this chart's going back to 1950, but it's probably the worst 10 days in the stock market that there is, considering how bad this looks right here, Mike. And this goes back to 1950. I know we talked about the one chart that went back to 1928 last week. I would bet it would be pretty consistent. So this is definitely crazy to see it going down that much at the end of the year. I would hope that it starts to go down a lot more right now. But hey, I'll take it even if it does pull back in the middle of September. And like you said, there's going to be lots of opportunities with SQQQ and other stocks like that. So if you're looking to buy SQQQ for a swing or something, that could be great. But let's just say you might want to be better with timing, and it looks like the end of the month is a little bit better. So at least back at the end of the month, you'll have a little bit more conviction. Even if we don't start dropping right now, that could be a sign that hey, maybe later in the month we'll start to come down, even if SPY holds its ground for the next couple weeks.
No doubt. Well, Tom, I think it's that part of the video where we stop hating on the month September and start talking about some other news that we have going on in the market right now. And that has to do with unemployment. So on Friday, we had a fresh new reading of the unemployment data, and the unemployment rate has just been sitting at this 3.5% mark for some time. And economists and a bunch of what you call big money people around the world have been why is unemployment still so low, even though the feds are just jacking up the rates right now? And everyone's all right, seriously, what's going on? But we're now finally starting to see the unemployment rate tick up. And, this typically happens during recessions. And the reason we're even talking about it right now is because this is the first time we're actually starting to see the unemployment rate tick up since the feds started rate hikes. So a lot of people are looking at this saying, uh-oh, the recession's starting. But, it doesn't start until it starts, but it's definitely worth keeping an eye on.
Yeah, it is. And just to even see the overall number, just the unemployment level itself going up too, it's definitely just terrible, Mike. A lot of economists have honestly been scratching their heads the past couple of years, because Jerome Powell with the feds, with what they've been doing with raising interest rates the way that they have been, this unemployment rate should have been going up sooner. So something's been lagging, or something with the economy has been kind of like lagging behind, and something had to give at some point. And I think that that is finally starting to happen, where we're getting to that point to where it's finally starting to give on the unemployment side of things. So we'll start to see unemployment move up a little bit into this winter, and then, maybe towards next year, as that unemployment rate gets worse, they'll start to obviously bring those rates back down. But for right now, they're looking to pause them and maybe even keep raising them, I keep hearing. But it looks like pausing is more of what they're looking at. But I know that those economists, Mike, have really been scratching their heads lately going, why isn't the unemployment rate going up whenever the feds are, bringing yields and rates so high that it should be bringing the rate up higher, but it hasn't been.
Yeah, so we will see. But either way, keep a close eye on this data going forward. But Tom, now it's time for some of the exciting stuff. What do we have on the earnings calendar for the week?
Yeah, earnings are honestly pretty good. So it's not like we have a ton, but we do have a few pretty big players here. So on Tuesday and after hours, Asana, ASAN, that is going to be a huge one. I know some people watch ZS and GitLab as well. But on Wednesday and after hours, we have AI, GameStop, ChargePoint, Dave & Buster's. Thursday, we have DocuSign, RH, Restoration Hardware. Kroger on Friday. Honestly, Mike, the only ones I'm going to really be keeping an eye on are Asana, AI, and DocuSign. My favorite one of the week, though, has to be AI. I mean, they are probably going to be the most popular one on this list.
Yeah, you stole it from me. That was going to be my top watch as well. But looking at AI's chart, it has had a pretty solid run over like the past year or so. Starting 2023, this stock was trading for like $11 a share. It hit highs of almost $50 a share back in the middle of June, and right now it's lingering right around 31. But for those of you who don't know, there is a huge AI bubble in the works, and this stock has definitely benefited from that quite a bit. Its earnings will be very closely watched, given that, AI is like all the buzz nowadays, and the stock's, it's not necessarily close to its highs, but, it's just kind of holding its ground. So I think this earnings report will be pretty pivotal for this stock, AI, and it'll be one to watch for the week.
Yeah, and I feel like these tech stocks have been pretty mixed on their reports lately. I feel like sometimes we'll get a nice report and they'll fly up, 10% after hours, and then sometimes we're out here getting some bad reports, and then these stocks will fall down 10, 20, 30% because they're just so overextended right now. And if the report does come in negative, this stock could definitely take a big dip, from where it is at 30. Like you said, the lows of this at the beginning of the year were down around $10. It's weird to say that this stock was up almost 400% this year. That's pretty wild. Yeah,
but then again, Tom, if the earnings are super great and the hype is real, this stock can, be on its second or third leg for the uptrend, So it's definitely one you have to watch pretty closely, because when it moves, it moves. So keep a close eye on this. And Tom, this week with the economic schedule is kind of boring, so please just make it quick.
Oh yeah, I'll try here. So looking at the list here, there's not really anything going on. Really, ISM Services PMI on a Wednesday at 10 a.m. There is some export numbers. Other than that, though, initial jobless claims on Thursday. Not really too much. There are some Fed speakers mixed in. So if you guys are interested in that, maybe towards the end of the week, watch Logan, Bowman, and Williams. But that's about it on that for the week, Mike. And between earnings and the calendar and the schedule, there's really not too much going on. So that'll kind of let us focus on the overall price action, which in my opinion is a lot better, especially if we continue to move down this week.
Love to see it. Well, it's now about that time to get into the best part of the video, which are some setups for tomorrow. One stock I'm watching very closely is that crazy China stock, NIO. So NIO had a pretty solid day on Friday. It was really leading the way for like the first hour of market open, and it was definitely turning some heads, to say the least. But looking at NIO right now, it's lingering right around that $11 level. It has recent highs up to like $16.20, and this stock is known to run when it has some good news and volume flowing in. So it's one I'll be watching very closely to the upside for tomorrow, but even the rest of the week. So keep a close eye on it.
Yeah, these China stocks, I think, are going to be pretty darn good here over the next few months, especially with how China's been they cut that tax for their for stock trading over there, and they were deregulating trading a little bit. So that sounds really good, honestly, just for almost any China stock. So I'll keep them all on the radar. But NIO specifically did look pretty hot. But I know while China stocks look hot, Mike, some of these stocks in our market are starting to look a little bit sour. And I'm actually watching Nvidia. They had a recent high around $520. Now they just hit right around 500 last week, and we saw a double top rejection at like 499 to 500. So really watch this one down this week. If we fall under this 480 support, I will be watching for puts Monday, Tuesday, I should say Tuesday, Wednesday, Thursday, but almost all week long, I'm going to be watching for puts on Nvidia. It's one of those semiconductors that had a bloody move Friday, and I think that it will continue down and push back to that 465 support.
You better watch your back, Tom. Some people are not going to like that comment from you. Nvidia to the downside, you better be prepared for some hate because it's coming.
I know. I was getting some love earlier in the week or a couple weeks ago whenever I thought Nvidia would do well with earnings, but they're all going to turn on me now.
Uh-oh. All right. Well, with my next one, I'm actually watching Intel, which is, a competitor to Nvidia, but this one is actually to the upside. So Intel is like one of those semiconductor / chip stocks that's just like, it's a little bit different from the rest, right? You could say that. So while chip stocks have had just a historic bull run over like the past couple of years, Intel kind of missed out on that. Like it really did, like especially in terms of stock performance. It's been struggling quite a bit, but like now it's finally starting to see some daylight and it's starting to run to the upside. Intel does have some pretty strong resistance right around like $37.19 per share. If you can see like a good break above that level, I will be watching this one to the upside. But, again, I want to say this is a pretty strong resistance level. Looks like it's like going to form like a triple top right here as well. So, it has potential, but it kind of has to like earn my respect first. Like it has to break above that resistance before it can, be a potential play to the upside.
Yeah, that is a huge resistance there, but I will say, though, I'll give props to Intel here. They have been really exploding. Even while NVIDIA dropped down as hard as they did Friday, Intel really held its ground. Going over to, like, AMD, they also did good. So that's good to see for those two stocks there, at least. But going over to my last play here, Mike, it is Tilray. I don't want anybody to forget about these marijuana stocks, so I wanted to mention them again. Tilray is looking pretty good here. There's a bit of a double bottom around 285. They're starting to run to the upside. If they break above $3 and then $3.15 come tomorrow and over the next few days, I will watch this one back up. These marijuana stocks, whenever they get hot, they can start to really go on some runs and get pretty high. So just keep your eyes on them. They are very volatile, and I just didn't want anyone to forget about them. It's been a long 3-day weekend, and these stocks are really fun to trade. So make sure they're on the radar, especially with all this good news coming out.
No doubt about that. But Tom, it's now time to jump right into the momentum plays for tomorrow. And with the first one, we have VZ or Verizon to the upside.
Yeah, VZ, I'll go ahead and make them break above $35.10 to $35.15. There's like that 5-cent margin there at the top. But if they break $35.15, then watch for calls. They've been kind of hot lately here. I will say, though, make it break that resistance, kind of like with Mike's day trade on NIO and Intel.
Alrighty, with the next one, we have SQ also to the upside.
Yeah, SQ, go ahead and make them break intraday resistance right at $58.50. I like that level there at the top.
All right, and then with the last one, we have the powerhouse Microsoft, but to the downside.
Yeah, Microsoft. I could see this one falling off pretty hard. There was a huge support last week, right around 326.80. So if we break under there, watch for puts, but that support is huge there, and there's some big supports on many of these big stocks here.
Alrighty, so we have that downside level for Microsoft. If it breaks below that, we're watching it for puts. And then we have the upside levels on SQ and VZ. If they break above those levels, we are watching them for calls. But it is now time for the big money $1 million trade of the day. And we are looking at FXI. So someone dumped a little bit over $1 million into the FXI $31.85 strike call options that expire on March 15th of 2024. Looking at this trade, FXI is basically a bunch of China stocks all in one. The Chinese government has been stimulating their economy quite a bit lately, which will definitely help out. On top of that, they're at like historically low valuations. Looking at this trade, it's basically $1 million bet that, saying the higher FXI goes, the more millions this trader will make. Obviously, looking at FXI, it's at a very low price point. I do like the risk reward on this setup. It has some time to it, which I also like. But I will say, if you do play this, you have to give it time. But overall, with everything being said, I do like this trade. And, this trader isn't putting $1 million into the setup by random chance.
Yeah, I actually really like this one, Mike. It has $1 million in here, and it has some time to it. And I would think even if, let's just say you're somebody who might not want to put that much money into options or etc., you could actually buy some shares of FXI2 to follow along with this. I think that, a move up to maybe 33 or something could be in the play for the next few months, if not even higher, if these China stocks do start moving. Those tax cuts on trading over there are huge. I think it was the first one since 2008 as far as those go. So that was huge to see there. And I will say, Mike, looking at this one, they have the 31.85 strike calls. I know somebody's going to ask it. So what's up with the 85 cents there?
Yeah, so especially with ETFs like this, sometimes they do distributions and it just kind of makes the whole options chain kind of whack. So in those situations, all the strikes get changed and it makes it a whole process. But for all intents and purposes, it's just like a normal call.
Yeah, we've seen it happen a lot of times it's happened a lot of times in the past. So I figured someone would ask it though. So I wanted to make sure that got covered there. But as far as the China stocks go here, Mike, they've been looking great. I know you called out NEO as your day trade. I think that one's actually going to be really hot here over the next few weeks as well. But then we even have BABA, JD, Baidu, and others. And even TCEHY, people sometimes forget about Tencent a little bit too. So there's a lot of China stocks out there that could be on watch here for some of these moves.
Beautiful. Well, guys, let's have an awesome week. If you are looking to capitalize off the momentum that we'll see, you got to check out the first link in the description and the comments down below. Basically, the premium part of the Stocked Up Discord has everything you could possibly need for short-term trading. We have custom bots like SM Bot that you won't find anywhere else. We have unusual options activity that shows you multi-million-dollar hedge fund trades every single day before the market closes. These are all pre-analyzed and pre-screened already. The work's done for you. We also have SM Bot and Hybrid Bot for those of you who are into shorter term trading. On top of that, you can chat with Town and myself all day long. And there's a bunch of other tools and features that, if we explained them all, we'd be here for an hour. So if you're looking to get in on the action in the market right now, you got to check out that first link in the description in the comments down below. You can cancel it anytime, but it is hands down the best program for short-term trading. So definitely check it out. We have an amazing community here, and we'd love to have you. So definitely check it out. But Tom, looking at the market right now, we are heading into one of the bloodiest months of the year. We have unemployment data, or the unemployment rate on the rise. We have China stocks starting to move, and I think all in all, we're set for a pretty exciting week. What do you think?
Yeah, I think so too, and I'm definitely watching these big supports out there. The SPY has pretty big resistance around 453 to 454 overhead. I'm definitely watching these supports around 450 though. If we start breaking under that and then down under 448, I think we'll start to get a lot more bloody. And if we look at the SPY, we go to Microsoft and these other big stocks, they are also on big support. So if these supports break, I hate to say it, but I think the floodgates are going to open, especially with September being historically as bad as it is. Specifically around the end of the month. But it sucks, Mike. I hope everybody had a good Labor Day, but get ready for some puts out there. There's going to be lots of opportunities, even if the market does go down. Remember, SQQQ, SPXS, puts on NVIDIA, Apple, Microsoft, other stocks like that can work. Will they work long term? Probably not. But whenever you get into the worst month of the year, it's definitely something to think about.
Absolutely. Well, if you guys are new to the channel and you're not subscribed, destroy that subscribe button. We post all the time and we cover multi-million-dollar trades in every single video, which is definitely very beneficial to have. On top of that, it takes us multiple hours to make these videos. We try to go through all the important things that are happening in the market right now and make it into a nice, easy to watch and sometimes funny 20-minute video. But yeah, if you guys like the channel, join up. You'll see our videos recommended to you more often. But I do think we're gonna have an awesome week, even though it'll be a short one, so I'm pretty excited. If last week was great for you, keep that momentum rolling. Don't let the foot off the gas. But even if it was slow for you, it's all right. Keep your head up high, and this week is a new week, so go in with a positive attitude. Keep those stop losses in place, and let's have a great week, everyone. Last but not least, I want to give a giant shout out to our Member of the Day, who is long overdue for this Member of the Day title. And that is K Kyle 88 in the Stocked Up Discord. He's been in the Discord for over 3 years now. He's a solid member of the community, and he's super active. So huge shout out to you, Kyle. Thank you for everything. And besides that, everyone, let's have an amazing week in the markets.